Good morning, morning, morning. Today is Thursday. No, yeah, Thursday. Just sitting down. Last day of school for the kids. Had to get them to school. And just sitting down. Look at this chart. I love the way that looks, but I have no idea what it's really looking like. Okay. Wow. Wow, wow, wow. This is a recipe for a drop. Oh man, that's nice. Okay, so we're gonna be taking a look. Good morning, BF. We're gonna be taking a look at Nasdaq. We're watching this. If I could already be short, I would. Here's a high, low, higher high. I would have wanted to see it come into this fair value gap, but that is just. This is too nice. This is nice. All right. There's really not much to look at. Here's why. If we look at the weekly, we're at all-time highs on the weekly. We've just expanded really high. We don't know if this is the top. We don't know if we're reversing. We don't know that, so no context here. On the daily candle, sorry, I'm showing on the weekly here. So here's the weekly candle. No context. Obviously bullish. But if we just keep going up like this, there's no way we can do anything. So we need to go to a lower time frame. The only context we have is that during Friday of last week, we came down into this fair value gap. And then this is the fair value gap that propelled us to the all-time highs here and making higher highs here. Okay, that is what the daily is telling us. We also have this large daily gap, opening gap right here. From that is a large opening. It's a gap. If we go to if we go all the way to here where price opened, okay, here is the open, close. All right, I'm going to put these on. This is our daily. This is our new day opening gap. This is when price closed yesterday and then opened. That's where it opened. So we have a gap right there. And it looks like price has not come down into it. So that is a draw on liquidity. We've had this huge run higher and a sharp turn right here. Really what we're looking for is, can we see our model? Can we either see a breaker model or can we see an inversion for this play? Sorry, this feels just weird doing it this way. I like the idea of having an ear open on this side so you can see that I can hear things, but it's just uncomfortable. So sorry, this looks like really good price action and I really want to find something here, so I'm kind of focused. Let's look at our news. What do we have for news on the calendar today? FX Factory. Go to Thursday. We have news at 9:45. We have manufacturing PMI. So surprisingly, this is nice price action for before news. We won't be taking any trades before 9:45. because we are going to sit and wait for price to show up, right? For price to do something for us. Okay. Going back to the daily. So now that we have context of this opening range, which are these represented by these two blue lines here, let's go down to the 4 hour. Oh my gosh, look at that drop. There's no reason why we don't hit these equal lows here. So now for me, my job is, how is there a way for me to get in while these lows are being targeted? Right now, no. I mean, it's a straight collapse. Holy cow. All right, so let's go to the 1 hour. We have a high, low, higher, high. These equal lows also will be a 1 hour breaker sitting right here with a fair value gap to the left. That's nice. But that's just too high of a time frame for us to really do anything. Okay, so now that we have some type of context that we're looking at, let's go down to the 15-minute. 15-minute equal lows here, 15-minute fair value gap here. We're going to mark this 15-minute. I like that. So see how price did that? It comes really close to it and then it does a large retracement. Disgusting. This is why if you have a target, you don't chase, because it can do this crap. That right there is 14 handles of drawdown that you would be in. And then it just pushes back lower or it continues higher. All right, so now let's go down to the 5-minute. We have these, and this 5-minute overlapping with this 15-minute. I mean, the draw, I think, is even lower below this, but we're just looking for our opportunity to get in. There's not an opportunity to get in. This is what I mean by when I say that the market is trying to take your money. When the market does stuff like this, it literally is calling your name. Get in, get in. I'm going without you. And then you get in, and then it starts going the other direction. It's disgusting. And it's so appealing visually that it takes almost everything in you not to want to get in. It takes everything in you to have self-control and say, hey, I know this is collapsing and it can run without me because I do not see my setup. It takes a lot of self-control to do that. We're going to do that today. We want to see some type of setup take place. It's extremely heavy. I just want to find some type of entry. Excuse me. All right, so this is the 1 minute. The only potential entry you could have taken, which I've done before, when you have a new set of instructions given by the algorithm. See, this is why I don't do this. I'm invalidating what I'm about to express to you. When you have price come up into a fair value gap and you're in a sell model, you will see these fair value gaps respected. Now, this fair value gap could still be respected. It could definitely be respected still, but it's just doing a deeper retracement. And when we have such large, I mean, this is from 931, this is to 955. That's 24 handles. Nobody's going to handle that kind of drawdown, especially if you're going short. Now, we obviously don't want to go long, but we are looking for something to where we can go short. We have equal lows here, we have a fair value gap here, and we have our new day opening gaps here and here. Let's see here. Let's go to regular trading hours. Look at this giant gap right here. This is a giant gap that will want to be filled at least to 50%. So downside draw is what I'm interested in. I just need to find an opportunity. Okay, so we're looking for something short for those reasons. We've hit all-time highs. We expanded so much in the pre-market session. We have equal lows. We have a large 15-minute and 5-minute fair value gap for an imbalance. We have a new day opening gap, high and low, which is from yesterday to today's gap that we have for downside draw on liquidity. And then we have the opening range gap, which I just showed you right here, which also is usually wants to be filled. So there is everything telling us if we're looking for something, it needs to be to the downside. That's the bias that I'm looking for. Now, if we don't hit this, I mean, it's possible. If we don't hit this and we just have a large green candle right here, I mean, you could go long on this 30-second or 1 minute and target these highs right here, and maybe we get all-time highs again. Because the market could, obviously, it still has the permission to do that. That just seems a little risky to me. I want to look for my setup. But circumstances are always changing. My opinion on things can change based on one single candle, right? So if I see one single candle, I'll make adjustments accordingly to what I think is appropriate for what I'm looking at. And you have to do that as a trader. You can't 100% marry a bias and say, well, I know we've hit all-time highs 3 times in the last 5 minutes, and I know my bias was short. Well, obviously, you should probably reconsider your bias. Look for evidence that would support something else. Figure out why you have that bias in the first place, right? Do you just prefer to take shorts, right? A lot of people do. I know I do. I love taking shorts. Wouldn't surprise me if we just collapse right here. We have 5 minutes. Actually, I take that back. We could consolidate here. We have 4 minutes left. Let's see if it wants to go. Yeah, it does want to go though. Tip Trades, good evening from Australia. My order didn't get activated. It was a nice 3R. Haha. Oh well. Live to trade another day. That is the key right there, isn't that, Tiff? If you can say you can live to trade another day, that means you've done something right with your risk management at least. I mean, that's the truth. You didn't oversize, you didn't over leverage, or you chose not to, revenge trade trying to get another opportunity in. So, no. I got on about, 10 minutes ago? 15 minutes ago is all I was able to do. So, sitting here looking for, man, when I sat down, we were sitting right about here. I'm like, oh my gosh. Look at the structure on that. Okay, guys, when I talk about structure, what were we talking about yesterday? What were we talking about yesterday? Where was yesterday at? Was this it? Was it this crap right here that we were watching? May 22nd, 10 a.m. Look at this. Look at this that we were in yesterday. And then look at that. Look at that structure. That is beautiful structure. So I'm optimistic that we're going to get some type of setup as long as we just don't miss it all right here. We have this 5 minute, let's see. So there's a 5 minute fair value gap right there. We close in 2 minutes on that. I mean, it's probably going to close below it. If it doesn't, I mean, it still could the next 5 minute candle. But this is a big level here. This is a big level here. A big imbalance here. So you could see some level of retracement, potentially. We have news in 3 minutes, so. These are the types of inversions I would play. Even though I'm bearish, I would play a bullish. I'd play an inversion like this right here if it closes really fast. You have a better one? This 2 minute looks nice. But we got 2 minutes for that candle to close. On the 30-second, we have a small breaker, but I'm not a fan of it. I'm going to watch this here. You probably won't even get it. But because of how bearish we are, I mean, you got to be quick on the trigger in case it doesn't go your direction for something like this. Look at that. Look at that wick. Let's see if it closes. If this closed green, okay, we closed green there. Very interesting. It's a news candle. I'm not going to put a ton of weight into it. Hey, thanks for joining quick. Tiff, thanks for joining. You have a good night. 1 minute even closed this way. I mean, yeah, that's a very... This is bullish for sure. This is bullish for sure. How long is it bullish for? I mean, it could be bullish. It could not be bullish by this next candle. I mean, it's just that single candle has bullish properties in it, right? But we need to see follow through. So I would normally, when I was younger, I've been doing this for 2 years, so not that much younger. But when it would come back down and it would wick right here and it would close, I would get in on that. And then I would have to deal with drawdown and then going my direction or completely going against me because I didn't wait for more context. I'm just watching and waiting, guys. I'm noticing how we came up here on this candle. We've respected this bearish order block here for the most part. I mean, it's still very heavy. Very heavy. It's this kind of stuff right here. This is optional. You guys are welcome to try something like this. When we are in a sell program, we have these ups and downs like this, high, low, high, low, high, low. When you have this bearish order block, when price comes up into that order block, even when there's an overlapping fair value gap, you can use that to go short. This is ICT's silver bullet. This is his silver bullet, but it only works when you are in a sell program. We're obviously in a very obvious sell program. So you could potentially take this short. Now, you might be asking, Tyler, why don't you take it short? Well, I could, but I'm determined to follow my rules right now. And then at some point, I'll probably add this as part of one of my models that I use. But right now, it's just from watching so much ICT, I just know that this is that model right there. Get in. You would get in right here. You set your stop loss right here. And then you target the lows or whatever. I don't like this anymore, this fair value gap. I wanted to do it right away. So this right here is on the 5 minute. It is a swing low with a 5 minute fair value gap in there. You can see it right here. I expect it to be ran through at some point, but just so you guys can see it, this is what that is right there. Ah, man. We are probably just gonna run it, guys. It's just collapsing. This take so much self-control to not want to chase. And if I see a good chase option, I'll take it. Yeah, I mean, you're going to see correlation in the dollar to the indices for sure. It's pretty clear that we're dropping. So I want to find an opportunity. I would love to get in before this because this is the clear draw on liquidity. Once we hit this, it's like I don't know what our target is. We could see crappy price action. I mean, that's the truth. When you see, like, we don't see movement like this very often, this clean. So that's why when I'm saying we have this silver bullet in here, it's something to consider as far as becoming more familiar with it and in what circumstances that silver bullet works. Technically, it is not ICT silver bullet because it needs to be 10 a.m. and it's not 10 a.m. yet. All right, we just tapped the new day opening gap high. I would love for this to leave the rest of this open. I would like a large retracement, and then I would like for another opportunity to go short. Excuse me. Now, this is a case where I look where this fair. Let's talk about. Let's keep looking at this. At these fair value gaps. The only fair value gap you would be interested in is this one right here, not this one, because you have your bearish order block sitting right here. So you'd want price to come up to and get very close to this swing, these swing lows right here. But this is for tape reading. We're seeing what price wants to do. This is the 30-second. Let's look at the 1 minute here. Oh, I like this 1 minute. Look at that. That's attractive. I mean, it's really hard to want to go long. This right here is what I'm referring to. We hit sell side. I'm only interested if it did it immediately, and it's obviously not doing that. So it's, I guess we got 38 seconds for this to wick and move the other direction. If it does, we'll talk about it then. When you got price action like this, you literally could accidentally click it, walk away, and come back up by 30, 40 points. It's insane. How do you guys feeling with this price action? How do you feel? I don't know. Have any of you taken a piece of this from top to bottom? Any of you? I know that for me, I got in where I got it. I logged in somewhere around 926. So a nice move had already taken place. We are just dropping. We're dropping like a rock. There's no opportunity for me to go short now. Can you tell I'm slightly irked? Oh, man. Oh, man, oh, man. I know this isn't exciting. This really sucks. All right, so ES is closed below the opening day gap. Opening day gap right here on ES is closed below opening day gap on NQ. We're sitting right in. Now, that doesn't surprise me. Why? Well, NQ has been significantly stronger than ES. Looks like ES did finally make a higher high, hit all-time highs again. Got 35 seconds before 10 o'clock. We'll see if price wants to do, has any type of reaction. It's really not having any type of reaction right now. We're at a very key level. So it doesn't surprise me that price is slowing down here. I mean, look at the key levels that we've marked out so far. Here is the top. We tag this 5 and 15 minute, we consolidate. We tag the low of this 15 minute, we consolidate. We run a swing low, consolidate for a quick second, and then run quickly to the new day opening gap. All your consolidations are always at key points, and so it's so important that you know what's to the left of your chart. You got to make sure you know what's to the left of your chart. Essential. All right, so we do have a low, high, lower low. It probably would look better on the 30-second, is my guess. No, it looks worse on the 30-second. Let's scrap that. So I have this 2-minute fair value gap marked out. We hit consequent encroachment of this new day opening gap. 50% of this high to this low we hit, and which is right around here. So that's respecting the premium side of this gap, meaning it's using it as support. One confluence right there. Another confluence, this is the only fair value gap within this leg towards this high. This range, let's see how big this is. 73 to 90. That's still very large. This is a very large gap to be able to have to manage drawdown. We did respect the consequent encroachment of this. This could push lower right here. This is somewhere where I have chased in the past. If we inverse this, that makes that attractive. I almost like that a little bit more. The only problem is we are already in our target, so that makes it less attractive. Previous day New York PM low. Previous day New York PM low, which is right here. No, right here. About 1440. Yeah, that could be a target. Previous day. We need to see what it wants to do with this new day opening gap first, though, I will say. So 30 seconds left on this candle here. I'm 50-50 on it, to be honest, because we're so low. Yes, BF, this could be the draw on liquidity, yesterday's PM lows, but it also may not be. We for sure know that this was the draw. It's so early in the day that you're probably right that it wants to go. I'm not going to take this. Okay, it did not even close. It did not close. I don't see price just automatically just shooting straight back up. So it's going to take a minute. So I want to be patient. I want to be patient. All I need is one good trade a day. So I don't care if I get it right in the morning or if it takes 2.5 hours. One good trade is really all we need. We did not close even this small fair value gap right here. When was this low made? 957. I like that we potentially made a low inside the 10 a.m. macro. We could, let's put in our, okay, I like this. Look at this. We put in our 50% mark. Look where the 50% is. Right at the breaker. Right at the higher time breaker. Do you guys see that? Okay, so we have our high, low, equal lows, higher high, break lower, equilibrium sitting right there. I almost entered right there. It's just too close. That's 73, 80. That's 7 handles, I guess. Wow, this is very deceptive. These are much bigger candles than I'm thinking. Each of these, this is 4 handles. Okay. I'm not gonna lie. I'm interested in longs at this point. I'm interested in hitting this 50% retracement. I love how it's correlating. That makes not my bias has changed, but my opportunity for a trade and a target is changed. But I still have to wait for something to set up. And I'm not going to take it off of a 1 minute inversion to target these highs. I need more structure. We're respecting this fair value gap. We've respected this fair value gap. Let's see if we violate this, or if we're going to consolidate in this fair value gap. So we broke this inversion, didn't hit the high. We didn't break this inversion. So we've disrespected going higher. We've respected going lower. There's a good chance as if we violate this, might be worth a demo trade to these lows. Look how much it's respecting right now. 10 seconds. See what happens here. See how much it's respecting? That's, man, right now my bias is 50-50, guys. Market maker buy model to 50%. Nathan, that's kind of what I was trying to refer to. We could see this market maker buy model. Okay, what is that? For those that are maybe don't know, right? Your market maker buy model would be initial consolidation, low, swing, low, distribution, stage 1, stage 2, low. Now we can run into the accumulation and reaccumulation back to the 50% and targeting these relatively equal highs in fair value gap. So that is what Nathan is referring to right there. And it's really attractive. That's why I'm considering changing my opinion on looking for a short, because of where this equilibrium is lying and how it overlaps a higher time frame bearish breaker. We have a bearish order block right here. See if it pushes right through it. We closed above this. You could target these highs right now. You could get in for an inversion and target this high, but you have this order based on that momentum. There's probably a higher probability than most that it's going to hit. I have this marked out. This was the 1 minute inversion that just closed too high for me. I mean, that's 13 handles. If I'm going to take this, depending on if and how it comes back down to this fair value gap, I'll look at taking this for a long. No, my model isn't in this, but we have reason for a market maker buy model. I just need to see how it comes down. If it comes down too aggressively, I'm not interested. We tapped into this fair value gap here. We just tapped. We'll see if this is an institutional order flow entry drill, meaning it just ticks into it and then it pushes higher really fast. I don't want to see that because I'm not going to take it. I'm liking the way the 30-second looks. There's just a little more structure. But the 1 minute also works. Let's see what. I want to see it find support here. Ideally, in this context, I want it to respect the premium portion of this inversion gap. If we go all the way through this into this, I'm not as interested in it. I want it to respect this premium version or premium portion of the inversion. Because that communicates narrative and it just adds extra confluences as far as where price may want to go to. Now you may think this looks really close. Here's the equilibrium. Well, that's at 930. We're at 900. So that's 30 handles from here to here. That you get a move like that, log off, baby. Call it a day. That's what that is. I'm just looking for signature and price that I can trust. Right now, I'm confident in this move right here, but I'm looking for a signature in price action that I can get in and trade. Now, ICT says that your entries are the least important thing. I tend to agree to that, but it takes a lot of cojones just to want to get in, not having your model that you've seen over and over and over again to build that confidence up. He's just been doing it so long. He's like, well, we're going to get in here because we have this here, this here, this here. And it's going to go for the, these equal lows or this equilibrium point. So we have found resistance at this bearish order block. We've been respecting the mean threshold of this order block. This is where my cursor is the mean threshold. And we've closed below that until now. Until now. We just went above that. We're probably going to hit this swing high. We are leaving relatively equal lows right here. I like this to come and make jagged later for a potential entry. All right, so it just hit this high and gonna tap into potentially this 5 minute as well. Now, if I was trading solely an eval account, I probably would have taken a little more risk by just going long right here or going long when we broke this inversion. But I'm not. I'm trading my live accounts. This is my money. This is my money. I want to be careful with it. This is how you should treat your money. If it just not frivolously. You should. Okay, let's see what happens here. I'm not getting in long here. Why? We did hit a swing high right here. I wanted it before we hit that. And we have some resistance here in the form of bearish order blocks. So we'll see how this candle closes and how it wants to respond. It's respecting this inversion. We tagged it barely. Depending on how the next few candles will tell me if I want to actually take a risk and put risk on the table. The 2-minute looks really good too. Yeah, Nathan, that was a good call out, by the way. Good call out. Great to put language to what I was seeing. I like that. See, isn't this? I'd rather have people here chatting with me compared to just me trying to figure all this out in my head. Being able to talk this out, process, is really nice. Okay. Man, I want to go. I'm hesitating. I wanted to get in right there, guys. I'm not going to lie. I did not get in. I hesitated. We'll see what happens here. High, low, higher, high. We break low it. We're respecting this breaker, this bearish breaker on the 30-second. $40 on the close of this. It's a inversion for the 2-minute. We have the 1-minute right here. We could still find support here. Man, doesn't it pay to be patient, man? Holy cow. Oh, I'm so glad I didn't let my emotions get me into that long. I guess price will take yesterday's lows. It could. We absolutely could. We still have this new day opening gap high and new day opening gap low that we need to... we didn't close below this 1 minute, if you notice that. We still have this low that we could target here. If we can close this 1 minute, you see this tiny breaker, high, low, higher, high? We break below this swing low inside of fair value gap, have a fair value gap here. We come into it and we go lower. That's nice. It just went against our idea that we're going to go up to these levels here, and we still could. We could still find a level. If we inverse this right now, I will take that. But it needs to be aggressive. Like, needs to pump. This is more reasonable as far as risk. 77 to 71, that's 7 handles. Respecting this. Okay, look at the 15 minute. 15 minute makes our low. The next 15-minute candle makes a potential order block. Potential order block. We wick up into the 15-minute fair value gap right in here and tag the inverse. We could see lower prices here. I mean, do you see how you can see both sides of the market right here? This is why it's almost better to stick with your bias and play what your initial bias was. So really, I'm looking at short. We could retrace higher, but we may not want to. It's just you pick the model, you pick your bias, and then you take a risk. You take a stab. I'm not as interested in this level here anymore on this 30-second or the 1 minute because it didn't do it immediately. It didn't do it immediately. It's actually looking more like just a distribution phase stage with a push lower, running these relatively, this low resistance liquidity sitting right here. So that's what we're seeing on this 15-minute. Makes a nice potential order block. This is not an order block until this candle closes below this candle. Till the current 15-minute candle closes below this green candle. That confirms this to be a bullish order block. Bearish order block, excuse me. See this 1 minute here? We're stalling in this 1 minute. This is a big, this is a key level. This is a key fair value gap. Ayush, did I pronounce that right? Ayush. Ayush. Hopefully I say that correct. Um, Going back to your question or your comment, I guess price is going to take yesterday's lows. If that's the case, your job is to find an entry that supports that. Right? We just took these equal highs right here. I like that. Let's see if we can respect this. I'm not interested in this inversion as much. I'm more interested in making these edges jagged and then a continuation lower. Okay, if you were going to take that, your entry would be right here. Stop loss would be the close below this fair value gap. That's going to be about 10 handles right there. The other thing here is that we really don't have a target but these highs. We don't have a swing high. We could go down to the 30-second. Let's see what the 30-second looks like. Your target would be right here. We got a fair value gap we're stalling at right here. Look at that. Look at that. See that fair value gap? We could just go back down now. It has permission to go back down because we rebalance this from this fair value gap. It doesn't have to target these swing highs. That's why we only want one fair value gap in a leg. So this 1 minute we have it, but where's that swing high? It's way up there. Okay, so it still absolutely could go, but that's one of the reasons why it just doesn't look as attractive is fair value gap, second fair value gap, then a swing high. We do. We're going to mark this out here. We're going to mark that breaker. This is the breaker. And this is the fair value gap. There is a fair value gap higher. So it has permission to reach up into here. If we're bearish, it has permission to reach up into here, but it may not. So you could take this as an entry, 93. Your stop loss would be right above this fair value gap, which is just too high. I mean, it's 10 handles, but this is really... That's really a nice... Oh my gosh, don't run without me. Hey, do you guys like me calling these out? I'm calling these out and I'm like, well, we got reason to go higher, reason to go lower. And it's like, it makes this much harder to decide, do you want to take a risk and put money on the table for it? I mean, this, you got in here at 991, you would have not been stopped out, and that would have been almost 20 points right there. All right, let's see what happens here, though. I'm interested in this. Because we should have seen that continue, to be honest. All right.
Order filled.
I'm going to take that. Targeting these swing highs right here. I liked how aggressive down and then aggressive up it was. Also bouncing off this inverse, I think. Yeah. This is a 30-second. Putting my
Order
stop in.
submitted.
Stops to break even. We're going to see if this runs a little bit higher. We could stop at this fair value gap, so if you were going to take some off, here's where you'd want to take some off at. We want to see if it pushes through this fair value gap here, targeting these swing highs. I'm going to set my target.
Order
limit
submitted.
order right there. I don't want to necessarily go for the highs because it could just reverse on me.
Order filled.
I don't. See how volatile that is? I'm taking that off. So there's the play, guys. Got 10 handles out of that. Could have got more if I sold it up here. I could be still holding it, but I'm not holding in that volatility. I just don't have the guts right now. So we want to see it respect that price. We're going to still do some tape reading through this. When I get a large candle like that and it closes red, you got to believe that's just with the type of price action we've seen, not knowing if we're going higher or lower. We've been respecting, and there's a good chance we're going higher, but it also respected this 1 minute or this 30-second fair value gap right here. This is the main reason. Is look where it closed below. It closed below this 30-second fair value gap again, and this is the one I said you need to take a level off here. If this wasn't here, I would have held until here. But because we pushed through it and then closed below it, I'm like, I'm not messing around with this crap. So that's a win. Well, that sucks, guys. I just was looking at my copied accounts. I did not have my copier on. That was on one account for one contract. That sucks. That would have been 1, 2, 3, 4, 5. That'd have been 5 more contract. 5, 2, 4, 6. That'd have been 12 more contracts I would have had for $200. That'd have been $2,600 on that trade if I had it live. That's frustrating. We respected this. We inverse this level again. Let's see how price wants to go. If it's still going to respect this. Now, if it would be so easy to want to try to get back in and want to continue this trade, but this is where I've lost money. I've lost money doing this way. So once I'm done with a trade, I tell myself, or once I get out of a trade, I say I have to wait till the next setup. I can't just get in because I think this same trade idea is going to continue to work out for me. You could. I've done that, and then I'll get in here because I'm getting in as of a reaction that I'm going to miss out. And then guess what it does? It retraces 10 handles, and now I'm in drawdown, and it's like, oh crap, maybe I was wrong, and you start second guessing yourself. So wait until the next trade idea forms. Let's see, we have 8 seconds. Are we going to respect this, or are we going to break above it? If we close above it, okay, we close above it, we should hit these highs. It's not an entry because we already grabbed these equal highs here. So if you take this as an inversion, you've already broken these equal highs in this wick. So it could just change directions right here. Because of that, it's not an option. How much is one contract in lot size? I don't know. I've never done Forex. I've never traded Forex. One contract, if it moves 1 point, so if it goes from 18,000 to 18,001, that's $20. Every tick or every 25 cents is $5. See how much you would have to wait through? When it closed below that and I took that and I'm like, I'm done, I'm out. Do you see what you would have to deal with as far as retracements and then having to deal with this up and downness? That's why, and it's still not guaranteed to actually hit it. All right, looks like we're going to hit it. It wouldn't surprise me if and when it breaks through this, we have a large candle. Okay, so there's the break. There's final target as far as this inversion goes. We fill this inversion right away. After hitting a high, let's see what happens. We have a small fair value gap here. This is a 30-second. Let's get 1 minute still doesn't look very good either. We have a high, low, or we have a low, high, lower, low. We really don't have a swing high here. So nothing here that has shown us any opportunity. What happened? Where's my camera off? Sorry, guys. Let me get my camera back up. Sorry about that. My camera just stopped. Apologize. Oh, look at that candle. Look at that. Look at that drop right there, my friends. Let's see here. We went this high. All right. Here's a model 22 or model. Here's a breaker. High, low, higher, high. Fair value gap here. We have a fair value gap here and potentially right here. It could just run without us, but I'm looking for it to come back in. This is the type of play I will take a risk on. Knowing that we just grabbed the swing highs, we went into the 1 minute or the 15 minute and the 5 minute. We went to the last fair value gap on the 1 minute as well. There's reason for me to be a little more aggressive, and we're coming up on the 11 o'clock. We're coming up on the 11 o'clock macro. Now, I just don't want it to run. I would love for it to retrace here. I don't want it to hit this low. That's ideally, I don't want it to hit this low. Draw down at 91 to 01. That's 10 handles. That's worth. Let's see how aggressive this is here. It did not hit the level. It went up short. And this is leaving a fair value gap. There's a fair value gap right there. And then we have this fair value gap right here. This could go without us. It really could. And we could miss it. It didn't hit look what it did hit though. It hit this green candle, the low of this green candle. So that's not my model. I wait for the lowest down closed candle to get hit. So it'd be this one, or I target the low. So this is aggressive here. I want it to just, I'm going to manually do this. I want to see if it wants to push through. If it does,
Order
take
filled.
it right there. All right, so I am in short right here. And I want to see this. I would love to see this run real fast.
Order submitted.
I'm not liking how it's not moving. I don't like how it's sitting here. I just want to see it continue lower. Based on these two red candles here, how aggressive they were, I want it to move quickly. We have our first low here. I'm going to target 20 handles. That's what I'm going to target. So I'm going to make this my target for 20 handles.
Order submitted.
That's what I want. With where price is right now, the last thing I want it to do is come back to break even. So come back to break even. So I'm gonna run that. Hit that.
Order filled.
Doesn't that feel good?
Order canceled.
Boy, that feels good. If I had more contracts, I would have taken one off there and targeted this low. That was a big trade. I had everything copied on that one. I had everything copied on that bad boy. Let's see what that was. So that's 1200, 1200, 850, 850, 850, 600. 2400. 2400 plus another 1600 is 34, 4000. $4,600. $4,600 right there. Boys and girls, I'm done. This is what the patience is all about. This is what patience is all about. Wait right there, my friends. Woo! Did any of you take that? It was on my screen. It was all right there. Did any of you take that? We're probably going to run this liquidity here. Tell me somebody here took it. Come on. Give me, how about this? Give me a 1 if you took it. Give me a 2 if you didn't take it. 1 if you took it. 2 if you didn't take it. It's just, yeah, look at this aggression. If I had multiple contracts, that's what I'd be hanging on to. 1 off the breaker. Nice job. Nice job, John. Way to go. This is the kind of move that you want to see. 1 contract. Way to go. 2, I had taken shorts and I got stopped out literally 10 minutes ago. Yeah, it sucks, man. I feel you. Thanks for being honest and sharing that, though. Inner Traders Library. Thanks for sharing. Look at this. Okay, so we grab this level of liquidity. Your stop I would put it right here. Your stop would put right there, targeting these lows. So that's where you would want to put your stop. We should not, or let me rephrase that, because there's reason for us to come back up here a little bit. We got this high, low, higher high, right? So price could come back up here and fill this fair value gap right here. It could, without breaking these lows. So you need to be taking size off if you haven't yet. But based on how aggressive, look how I just ticked this. Barely missed the tick of this, came up, left the fair value gap with this swing low. This is a higher time frame bearish order block right here. So look at this fair value gap, and then from this low to this high will be in a higher time frame a bearish order block. Right here's, you can see it on the 5-minute, and it's probably on the 15-minute. It's not on the 15-minute. So you have this fair value gap on this low will probably be reached and touched. If you're in this trade and we inverse this 1-minute fair value gap, then you would want to close your trade. this is the inversion of this means a close of your trade if you're still in it. Now, I'm out, and maybe other people are out as well, but this is what we do past the trade. I'm not just going to walk away. I'm going to watch this play out because I need to build confidence to hold longer, right? So we've got this low. I'm okay with coming into here and wicking higher, but ultimately we need to close not above this box for me to stay in this trade. Okay? Either you're getting fully out at this low or you're taking another size off right there. Ultimate target is down here at the new day opening gap low. That's your ultimate target. That would be the ultimate target. BF, you're in ES. Awesome. Way to go. Do you like trading ES more than NQ? And if so, what are some of the reasons why you like ES more than NQ? I have my reasons why I like NQ more than others as well. All right, I'm gonna keep. I like what price action is doing. I'm going to switch into a eval account, so I don't do anything else on my fundeds. We'll be sitting out. We're gonna go to an eval account and watch and see what price wants to do. All right, so there we now hit a low. You're taking size off here. Now we're in unspoken territory. We could just want to do a large retracement. We could continue lower aggressively. So you should have just one light contract left. Seeing if we want to push any lower, I would probably take your final one off here. To be honest, that's where I would take it off at. BFNQ, I need to spend more time with. I would normally be stopped out, and then it goes for targets. Yeah. This is why you go lower size on NQ, even micros, because it will do that. The thing about breakers, though, I'll mention, is that breakers, if they're on the right side of the move, look how much drawdown you really get. We got in at 18,891. It went up to 18,893.25. So that was 2.25. 2.25 handles. 2.25 handles is what your drawdown was by waiting for this fair value gap and this breaker. They tend to respect these levels very well. And if you do get stopped out with the standard, 10-point stop loss, you're probably on the wrong side of the move. And that's why these work well when you got them right, man. Whew. I mean, look at that. Look at that beauty. Look at that beauty. Man. Makes you feel so good. It's like golf, man. You hit that perfect shot in golf, and it's like you're hooked. You do stuff like this, man, and you're like, man, I'm hooked. If I can maintain, look, okay, so we hit the slow. You should be all out here. I would be all out. All out. All out. If you did that from where we entered, standard stop loss at 10. If you targeted that, that's 75 handles, guys. 75 handles. I just took, what did I take, 20? I took 20 handles. You don't need the whole move, but we took 20 handles on a 75 handle move. That is what I'm talking about. Yes, you are correct. We are probably going to take out these lows based on this activity here. Now, keep in mind, Ayush, these lows that we're looking at here. Let me go to the 1 hour. It might look a little bit better. Okay, so these lows are from yesterday. This could be the final target for the day. That means 4 p.m. 4 p.m. We still have five hours. So 5 hours price could do all kinds of crap. So you want to make sure that you're not seeing this low and saying, okay, I'm getting in. I'm gonna hold through major drawdown, and then price decides it doesn't want to go back down. It doesn't want to go down there. So you gotta go for specific runs and specific targets. So, okay, good. So you're already out. Yeah, great. Yeah, call that out and then watch price and see how it runs, man. So good move. Your strategy is a 4-hour candle, 10 a.m. open. I look for a 15-minute fair value gap opposite to my bias. Entry inside 15-minute fair value gap on lower time frame for model. Have a look at it on NQ. Let's see. What do we got here? So we'll do it on this candle. So 4-hour. 10 a.m. open. So here's our 10 a.m. open, and then look for a 15-minute fair value gap opposed. So you're looking for a bearish 15-minute fair value gap. So you want to look for, you're saying from 10 a.m., let's drop into the 15-minute. You're looking for a 15-minute fair value gap on the left side of the chart in the form of a SIBI, a sell side imbalance, buy side inefficiency. So it would be this fair value gap right here. I'm assuming this is what you're talking about. Tell me if I got you right. Let's remove this here and these things here. So BF, you're saying based on, you figure out your bias based on the 4-hour, which way you think it's going to go. Then you drop down based on what you think the bias is. In this case, it's a downside. You're looking for a 15-minute bearish order block, 15-minute bearish fair value gap. Okay, correct. And then enter inside the 15-minute fair value gap on a lower time frame model. So we have this 15-minute fair value gap right here. Let me remove some of this. And then you're looking for an entry somewhere in this candle here to go short. So did you get in at 10:15 or did you get in around 10:40? based on that, because this fair value gap in itself is 6 handles, and the highest was 10.25 handles if you were to get in on the first entry for this specific move. I'm sure there's larger moves, especially on the 4-hour. So, and then let's see, bias enter on the 15-minute lower time frame. So do you prefer your entry on the 1 minute? Is that what you would be looking for? And if I was looking and I was looking at this 15-minute, I would be looking at these two fair value gaps to the left. And the reason I would look for those two fair value gaps on the left is to the left of that are green candles or a bearish order block, which will be resistance in price, especially if we're bearish. So price should not go above that. So if I was to take your type of model, that's what I would have been looking for. And so that means my entry would have either been at this candle at 1016, or you could have wicked it at 1040 for an entry. Best advice for daily bias. Ayush, your best advice for daily bias. I did a video on it. It's called, what is it called? And you can watch it, but I'm going to go over the three. I'll go over the 3 things right now. So let's see here. I'm just remembering the name. It's called, if you want to watch it in detail, it's called Crack the Code of Daily Bias. 3 simple methods I use to decode daily bias every time. That's what I use. There's 3 steps in that. Number 1 is you have to find out, you look at where let's go break it down here instead of just trying to do that. Let's see. Let's answer this question this way. The first thing you do when you have to identify daily bias is you need to go to a higher time frame. And when you're at a higher time frame, I did this at the beginning of the stream as well, Ayush, is I did what I'm about to tell you before. Is I go in and I first look at the weekly. I'm like, okay, we've made all-time highs over the night session. So weekly, we could go higher, but we have Friday that's left. So I don't have any bias for the weekly. We've already hit the all-time highs, so I don't have any more weekly type of bias. So then we have to go down to the daily. Once we're at the daily, I saw that we are way up here at this time. And so I'm like, okay, we're either going to continue this trend or we're going to retrace. Now, I just know from screen time that when you make really high highs in the AM session or in the overnight session, so where are we at? So let's go down. So here is, let's look at just the 4-hour here. This candle opened at 1800 last night. And from 1800 till this point in time, 6 a.m., it went up 860. It went up 260 points all overnight. So that tells me already that there's a good probability that I need to look to go short. Okay, so that's number 1. Number 2, we are looking for PD arrays that support us as far as targets. Our first PD array was here on the 4-hour. And then we have this volume imbalance below. So these volume imbalance are PD arrays that my eyes drawing to decide, are these points of interest that price could run to? Because we have no target on the upside. There is no good target on the upside. So if we are bearish, where would it may want to go? And so far, my analysis for the new day opening gap was correct. We filled this new day opening gap in. Now, the last thing, we look at premium and discount. Okay, premium and discount. So if I go from the last leg, okay, we have price doing all of this, right? So we have this low, high, low, high, low, highest high right there. If I go from the last swing low and I target our highs, I want to find out where equilibrium is. Guess where equilibrium is? Equilibrium is within our new day opening gap. At the point in time I saw this, we were way up here. We were actually way up here. So my thought is, if we want to go higher, I'm not willing to take a move higher unless we are here. Unless we hit this 50%. So now I know that this top half is premium. If I'm in this top half, I want to go short. I want to look for short entries to go into the bottom half of this Fibonacci tool, and that is in discount. Anytime we're in discount, we want to look to go long. Okay, so we got discount, premium, premium, discount. Go short in premium, go long in discount. We were really high, and from where we were, way up here, we had a long ways to go to get to equilibrium. So I'm already telling myself I want to look for shorts because of where we are in this last swing leg high. From this last swing low to this last swing high, where's equilibrium? Oh, we're way up here right now. I'm going to look for shorts till we get to this point. Now, we probably got to this point before we took our short. I bet you we did. And that's okay. Yeah, so we hit equilibrium here, and that's why when we hit this point right here, I was interested in trying to go long. Remember? If you were here early enough in the stream, I was saying, okay, we hit the new day opening gap right here. Here's 50%. Here's 50% right here. We went below it. Okay. Hey, there is potential reason we could go higher now. And I actually took a long and I got 10 handles out of it. But we found that price was not moving any higher, and we saw our breaker to the downside and it moved with aggression. So that tells me I'm getting in, I'm taking the short. And then we fill in this new day opening gap. Since we filled in this new day opening gap, we are now retracing. If you want to see other examples, you can watch that video that I referenced, Decoding Daily Bias. I just made it a few days ago. You can check that out. Solid 15-minute, correct. Inner Traders Library. I feel so frustrated right now. Price stopped you out, and then ran for your take profit afterwards. Apart from the game, but still annoying. Lovely stream, man. Keep it up. I'll tune in tomorrow again. Need to calm myself down. Dude, calming yourself down is so hard. So after we got off stream yesterday, I took a trade, and I took it too quickly. I was doing some other stuff, and then I took a trade, and it ended out to be a loss. But I'll show you what I took, and I'm like, oh, this is going to work. It didn't. Where was it? I think it was right around here. Yeah. Let's go down to the 1 minute. And I'm sharing this because I know exactly how you feel. Because everything in me wanted to say, get back in and try to make more money. Try to get it back. Okay. So we had this. This was the price action that we had right here. Okay. At this point in time, this is what I was looking at. I'll remove this. We hit these highs here, and we started consolidating and slowly drifting off, and we had this large red candle right here. Now, I saw this high, low, higher high, and we broke below that with a fair value gap here and a fair value gap here. I went short, as you can see. I went short right here. I went short right here, and I was targeting 10, 20 handles. But the mistake I made was I completely ignored these equal lows. And we hit those equal lows. That invalidated my trade idea from the beginning, yet I didn't pay close enough attention to it. And I'm in the trade, and by the time I see it, I'm already emotionally involved, and I'm like, well, let's just see if it plays out. I should have freaking closed the trade as soon as I saw that. But I didn't. I had a loss, and from that moment on, it's like this internal anguish just appears. Like, I can't believe I did that. I want to get it back. Now I'm fighting this internal battle to keep myself from trading more because I know what has happened in the past. I start taking poor setups, just trying to get a trade because I become impatient in my trading. Holy freaking cow. That is a real battle. And I just want to encourage you that close down your charts. One trading day does not determine you being a successful trader or not. Your ability to walk away tells me more about you on how mature you are as a trader than you trying to get back what you lost. It makes for a great story to say, yeah, I was down $3,000 and oh man, I couldn't believe that. So I hustled, I buckled down and, I clawed back that money. By the end of the day, I was up $300. Makes for a great story. But a mature trader, in my opinion, will say, well, I know that I could earn this back, but if I lose even more, that urge to size up to try to make more money, to try to get that back, is going to be even greater. And I'm going to start this sick cycle that's just going to lead down to more losses and potentially blowing an account. So being able to walk away, man, props to you. Close it down. Thanks for joining the stream. And yeah, we'll see you tomorrow. I'd love for you to join us again. There is one 15-minute paragraph. I wanted to see the candle reject. Preferred 2022 model. Yes. Target previous 4-hour low. Yes. Yeah. Totally, BF. Break and rally. Daily bias is just putting the puzzle pieces all together. You dropping some gold. Thank you. I appreciate it. Thank you so much. But daily bias is everything. Daily bias is everything. Let's see what's happening. Let's see what's happening in the rest. Let's see if we are... Let's see if we want to respect the initial breaker that we got in. Do you guys see that? I have my funded accounts closed. We hit a key level. We could just retrace again right here. It's a very high possibility. I have a mechanical breaker model that I'm testing out. And that is when I call them reclaimed breakers. Breaker number 1, come back down. Breaker number 2, take 10 points. Breaker number 3, take 10 points. So you can actually target the same breaker multiple times and take small 10 handle targets out of it. And you can actually use that as a model. I actually have a video on that on my channel. I think I call it something like the magic box. You can check that out. But you can actually take this breaker here that obviously worked. And because it worked, there's a good chance this is going to give you at least 10 handles. And this one give you at least 10 handles. And I'm sure this already does. So that gives us 13 handles if you were to get in from the high. So you don't try to hold for long moves. You just take out the 10 points that it gives you right away. And so this would have given you 10, 10, and 10. That would have been 30 points you would have been able to get right there. That's a mechanical breaker model that I've noticed Price does this quite often. The more times it hits this, though, the more likelihood we're just going to push up through it. So you just have to be careful about that. Oh, man. Good day, good day, good day. Good day, my friends. I'm 10 points away from funding another account, so I'm probably going to see if I can find at least 10 handles for an eval account right here. Yeah, see how you have to be careful on these, because there's a good chance it just wants to push up through it, especially since we filled in this daily or this new day opening gap, and for how aggressive this really was moving back up. So, straight consolidation. When did you start trading? The journey was long. I started trading years ago, but knew nothing and really did nothing with it. I came across, what's that guy's name? He was on Words of Wisdom recently, curly hair. He was like the original multi-million-dollar day trader. I forget his name. He does penny stocks. I got into penny stocks. I bought some of his courses. Didn't like any. I mean, I just hated the idea of trying to find something that told you or that was moving. So I tried it for a little bit. Really could not get any traction on it. And to be honest, I don't know how committed I was. Because you could really, if you apply yourself to any model and you determine that you're going to figure this out, you can figure it out. I wasn't at that point. That was probably four or 5 years ago. Then I just walked away from trading with no intention to do things anymore. So I really don't count that as that's part of my journey, but I really don't count it as like me truly trying to trade. Then about 2 years ago, I decided that, no, that's not his name. White guy. I think he's actually Jewish. Curly hair. What's his name? Tim something. Tim Sykes. I did his stuff first. Tim Sykes, he did penny stocks. So I did his stuff, but then I eventually just walked away. And I mean, to be honest, I could walk away. Real estate, I'm a realtor, and real estate's phenomenal. I mean, I make anywhere from $200,000 to $300,000 a year selling real estate. So I'm basically walking away from $200,000 to $300,000 a year because I believe this is going to be better. And I've taken a big pay cut because I've chosen to be consistent and trying to learn this long term. So I'm making my way back up there, but I'm not quite there yet. In my opinion, I think I have a long ways to go. So 2 years ago, I came across a couple other people that there's this one kid that was making like 13 grand a day, and I'm like, dude, this kid's barely 20, making 13 grand a day. All right, let's learn from him. great trader, but taught me nothing. I wasted thousands of dollars on his stuff. Thousands of dollars being a part of his live streams, and basically I use zero of it today. Then I was at a point where I was like, okay, I actually told the Lord, I said, Lord, I need you to teach me how to do this, or I have to walk away. I can't keep burning through money, because I was at that, up to this point, up to a year ago, I was basically gambling. I had no strategy. I had no risk management. I had no idea on size and position sizing. I had no idea on right times to trade. I just literally would take other people. I was basically a copy bot, a bot trader. Tell me what to trade, I'll get in, I'll do it. And I just decided that I can't keep doing that. Lord, I need you to give me direction. I need you to show me what to do. And I sowed a seed. You may or may not believe in this, or even believe in Christ or being a Christian, but I remember I said, okay, Lord, I'm going to give, I gave like $10. I said, Lord, I'm going to give $10 to this ministry that I believe I want to sow into because I love what they're doing. Lord, I'm asking you, I'm naming this seed profitability in day trading. I need you to show me how to become profitable in day trading. And I did that, and 6 days later, I was watching a YouTube video from ICT, not knowing who ICT was, and he started calling out price, and it basically ran there. And out of my mouth, I go, this is freaking insane. And then immediately, I felt an internal voice from the Lord saying, this is your answer to your prayer. And that was on April 15th of last year. April 15th of 2023, I came across ICT, joined his 2023 mentorship, and I, at that point, said, I am 100% committed. I will see this through. I will make sure this changes my life and my family's life. Because real estate's great. I do great in real estate, but it ties me down to one location. I have to be in my hometown, in my city, and I can't travel as much as I want to. So ICT basically changed everything for me. And since then, I just felt the conviction that I want to help other people become financially free, financially independent. And I believe that the content ICT teaches is, yes, Matt. Yeah, I basically gave it all. I'll probably do it a few more times, because this is really the first time talking about it out loud on stream. It'll help me articulate it clear in the future, but you can go back and watch it. But yeah, so ICT basically was that point where I decided I'm all in. There is no other option. I said to myself, there's no other option. I will figure this out. That was the level of commitment and determination that I had. And there's a quote from some random trader on X that I came across, and it says, I say that I'm committed to becoming successful, but I'm not committed to following or doing the actions to be successful. And my journey has been basically an up and down of that. I thought I was doing enough, but realized I wasn't committed enough. So I recommit. I buckle down even more. And then at that point, it's like, all right, I'm making progress. And then I see some regression in my trading. And then it's like, okay, am I really committed? Wow. Actually, no. I need to be doing back testing. I need to be going over my charts daily. I need to be focusing on my psychology. And so it's been this journey of up and down and refining that. And hands down, psychology is the most difficult thing to overcome. Understanding, being present in your trading and how you feel is so important, that if you can be present. What I mean by being present is if you can be aware of how you're feeling internally before, during, and after you make a trade, and then logically make decisions based on how you're feeling so that you can make smart decisions, you're going to be much better off. Looking at this right here. Sorry. I'm liking that 28. We're still respecting that breaker. I'm looking to do an eval trade to try to get an account passed here. I just need 110 handle move. But the internal, man, if you can master that psychology, you're going to be significantly further ahead than most traders. And so that basically has been the last 6 months, 6 months or so. And today's Tyler is 10 times better than I was just 5 months ago. 5 months ago, man, I mean, I'm a different person when it comes to how I trade. It's insane. Because I've one, decided, two, was committed to do the actions. And if you can commit to doing the actions, committing to the actions is saying, oh, I want to trade, is saying I'm going to walk away even though I'm going to see if it goes for this low right here. It's probably going to wick me out. It took these highs right here. See how it took those highs? It took those highs and then made a bearish candle. I wanted to see it just run these lows right here. And then it goes against me immediately. But if you can commit to actually walking away and doing the hard things that you know you should be doing, you're going to be significantly better off. Significantly better off as a trader. If these break these highs, I'm going to be out. And it looks like I will. I'm very relaxed about this, guys. I mean, it's an eval account, and it's just about funded. Let me just confirm. Yeah. This is why you stick to your rules. Now that, I'm not mad that I took that, because we broke these swing highs right here, or we broke these equal highs, and it could do it again, and we're still within this breaker. I just wanted to see it hit the swing low. Yeah, discipline is the key, man. Discipline is everything. 18,925, 25. Is that on a... Oh, yeah, you're looking on the 15-minute? Yeah. Yeah, I was just looking for a wick down. This is why this mechanical breaker, so we hit 1, 2, 3, 4 times, and then really have been consolidating. You could have got a fourth one here, a fifth one here, but that's the risk on these mechanical breakers, is that more than likely it wants to move higher. I just liked how slow this was going. Saw this candle here break this high and then move lower. I was just targeting the swing low here. But look what it did. Went the other way. Now we just closed this 1 minute fair value gap. We should target these equal highs here. These relatively equal highs. Oh man. Well, guys, it's 11:30, 10:30 my time. I think I'm gonna call it a day. I probably will be back on tomorrow. At least that's my plan. So I don't think I actually put something on Twitter today, but I'll try to make sure I do that if you guys are on X. So we're gonna call it a day on that one, guys. Thanks for joining me. Any comments? Just put them in the comments below or send me a message on X. Either way, we'll see you guys tomorrow. Talk to you soon.